Welcome back to the Brent Bruce Daily. Today is August the 10th. It is now 12:59 Central Time, and we need to get into this consumer price index number that came out today that was highly anticipated. And as a matter of fact, it's interesting that it came out actually quite a bit lighter than we had expected it to. It came in at 8.5% on the headline number, and I was really thinking that maybe we'd be looking at like 9.3, 9.4 with higher numbers of inflation, but actually we've come in a little bit lower. And home loan interest rates are liking that. We're going to dive into that in just a moment. We're going to break this report down just a little bit before we get into our home loan interest rates and see how it is actually affecting our Brent Bruce Daily report. So let's jump over and take a look at this little chart that we break down a little bit of the consumer price index numbers. This report here is something that we really appreciate that's come in from our friends over at MBS Highway. Got a call coming in here. And we always want to give a shout out to Barry Habib and Dan Habib for the reports that they put together for us on a daily basis. But this is really nice that it breaks down a little bit of what's going on within that CPI report. So overall, again, the headline number came in at 8.5. It was at 9.1. We had been talking about that earlier in the week. And the estimate was at 8.7. Mine was a little bit higher. I was estimating into the 9.3 number, but overall came in quite a bit cooler than expected. The core number, which strips out food and energy, so removes food and energy from the numbers, came in at 5.9, and it was at 5.9. So that actually stayed flat. And the estimation was that that was going to go up to 6.1. Well, if you break down here and you look at a couple of the hot topics, I mean, gasoline down 7.7% month over month. That makes sense, right? We all know that the gas prices have come down at the pump, but it's so volatile that we're expecting those gas prices to go up even next week. We're hearing that they're going to go not necessarily back up all the way, but they are going to go up. So that volatility is why we have this core number versus the headline number, okay? The other one that's important to point out is the food numbers here. 1.1% increase in inflation of food prices month over month and 10% or 11% year over year. Now, the food is a bigger line item for me. I don't know about yourself, but I actually have 4 kids. So the food number is a bigger number than my gasoline number. It's, I think most people are probably that way. So definitely this is something that weighs more heavily on me than the gasoline number. So overall, the CPI report came in with inflation cooler than had been expected and definitely cooler than last month. I don't really know how that is the case. I don't think that inflation is cooler. I don't know about you, how things are when you're going to the grocery store or spending money on other consumer products, but I'm not really seeing that happening. So came in lower than I had anticipated. Let's take a look at the chart really quickly here. So as expected, again, remember that inflation is the enemy of bonds. So when we get a report that comes out that shows inflation is not as hot as expected, that inflation is coming down, home loan interest rates are going to like that. If you watch this show on the daily basis, you already know that. So 22 basis point improvement to home loan interest rates because of the CPI report coming in cooler than had been anticipated. What does that do to our charts over here? We were in this range yesterday. We were worried about having a hot inflation number because we had a triple floor of support that we did not want to break through, because if you were to break through this triple floor of support, look at how far we have to fall before we hit the next floor of support, which is the Fibonacci level, and that is a long way down. We probably would have been at 5.5% on our Brent Bruce Daily interest rates, which we know are much lower than the mortgage bankers, who probably would have been at 6%. And we don't want to be in the 6% range on a highly qualified client. So fortunately, the mortgage-backed security market improved today, broke through this Fibonacci level, broke through the 100-day moving average, but it has been getting pulled back as we're now at about this range here. We're up 23. At one point, we were up 45. So really what's happening is that the markets are digesting the details of this consumer price index report and determining what they really feel about what's inside the report and what they think is going to happen in the future. There's also indication, because inflation was subsiding on this report, that it's going to hopefully allow the federal funds rate to only be increased by 0.5% and not 0.75% the next time that they make an adjustment to it, which I believe is going to be in September. So we'll be on the lookout for that. What has this done to our actual home loan interest rates? Let's pull up the Brent Bruce Daily here. And remember, this is a very well qualified 30-year fixed conventional 800 FICO score, 25% down, single family residence, a unicorn client, the best rates you're going to get. And we were at 4.99% yesterday. So we would anticipate that the interest rate today would be lower than 4.99 because of the improvements that we have seen to the overall bond market. Now, we are at 4.99. Why would we still be at 4.99 if the home loan, if the mortgage-backed security market is improving? Well, because the improvement is being reflected in the credit. The credit to the customer has gone up quite a bit. And we need this to go up a little further. There has to be more credit in a 4.99 before we're going to see a 4.875 that is actually without any cost. So a no point loan. But if we open this up, we're going to see that a 4.875 is only costing $227. So there has been an improvement to the market. It's just not enough to get us to that 4.875 or 4.75 without any points. So we are moving in the right direction. However, we're kind of losing it. It's kind of slipping away from us as, again, the investment community is diving deeper into the numbers that are within that CPI report. So as we talked about here, let me get back to our interest rates. We are at 4.999 on the Brent Bruce Daily, which is the very well qualified customer. Make sure that you like, subscribe, and share, because we are moving over to YouTube, and I'm going to be doing more lengthy videos that are going to train more and educate more and not try to fit that into the Brent Bruce Daily, because we want to focus on the hottest items of the day and the actual effect of the effect that has on the interest rates of that day. Let me know your thoughts, questions. Make sure that you like, subscribe, and share. Have a great day, and we will talk to you again tomorrow.